All right. We live? What's that incessant typing?
That's
Sorry.
Alex.
Are we live?
Yeah.
I think we're live. All right. Welcome back to another episode of Token Narratives. I'm Graham Stone, joined by Alex Richardson and David Sensel. And every week, the three of us get together to discuss what's happening in the world of Bitcoin and crypto, which these days has been consumed by, of course, the conflict in the Middle East. So let's start off with a little recap of what's happened in the last few days. The president, of course, alleged that he had good and productive talks with an unknown Iranian official who couldn't be named because otherwise he would be killed. Iran said that was fake news. There have been reports of a 15-point plan to end the war. Other updates include that Pakistan is acting as a messenger between the US and Iran, that seems like a new development. The 15-point plan is being rejected. Uh, Iran will not confirm that any peace talks are happening. The
Rejected on social media, right?
Rejected on social media. There's there's a fog of war. It's a propaganda. I mean, negotiations are happening on X. It would appear. Uh, Meanwhile, let's
God
go through
help
some
us.
of the let's go through some of the disruptions that are happening around the world. So, first of all, starting off with just the scale of these things, it's been reported that, or people have been pointing out that the current scale of the oil disruption is four or five times as bad as the 1973 oil embargo, which I wasn't alive then, but I'm told there were people lining up around the block to get gas. You had stagflation. It was an economic disaster. At that time, 4.5 million barrels per day were removed from the global supply, which at that time was around 7% of the global supply. Today, with the closure of the Strait of Hormuz, we're talking 20 million barrels per day of oil being removed from supply, and that is closer to 20% of the global supply. So,
I'd also like to point out here just about the 70s part. So that disruption also helped sculpt uh, global, global policy for like the next 30 or 40 years, right? Like that disruption put America on its path of like, whoa, we can't have this happen again. We got to make sure. And so like the implications, the long term implications are of that scale, I believe, right?
we're looking at a potential huge reordering of oil supply chains and beyond.
Yeah, and Alex and I touched on this earlier in our live stream on Rumble. At least I thought I thought in the positive this will get Canada and Europe um, to take their finger out of the nether regions and start taking this kind of non-renewable energy thing seriously again. And so again, that's a silver lining. But sorry, I interrupted, Graham.
Not at all. So, just going through some of the other points, you're starting to see things break in some parts of the world already. So, several countries are now in trouble because of the oil shortage. In the Philippines, they have declared a state of emergency. It's being reported that they have around 45 days of fuel supply based on current consumption levels. Australia, you're seeing skyrocketing food prices. There are reports of 164 petrol stations out of diesel, and Similar reports coming out of India. Huge lineups to get gas. People panicking, panic buying. Any other major
Philippines,
disruptions that we've missed? Yeah, Philippines mentioned.
There's also
and
a push to go back to remote work for a lot of these Asian countries. Pakistan announced a remote work for half of its public sector employees. Sri Lanka has got a midweek holiday going that they introduced for people in certain industries. Laos, Vietnam, Thailand, they're also pushing for like online based work to reduce energy consumption. I think Indonesia, the government there is weighing up another work from home policy. So kind of going back to the COVID era policies.
yeah, Korea as well. Yesterday they announced a system where they're starting to limit the cars that can drive based on license plate numbers. So things again harkening back to the 70s. I think my my guess is, like I said earlier in the week and everything, that's going to flow to all Asian countries. Japan will be introducing things like that next, and then just as this thing prolongs, it'll just get progressively and progressively more stringent. Um, so yeah, that's happening in Asia now. I think all the people that I listened to were talking about this last week. I wrote about most of this in the newsletter for last week. So forward looking, which I'll be writing in the newsletter tomorrow, is that the things that you're seeing in Asia now, which were talked about last week, are coming to Europe probably next week. So expect all this kind of stuff that we're talking about now to start happening in Europe next week, 10 days, something like that.
That also sounds quite a bit like the COVID era.
Yeah. So like I think one of the biggest accounts that I've been happy that I followed during the COVID era. I began following the COVID era, and then in the start of the Russia-Ukraine conflict was Rory Johnston. And again, I found him to be like level-headed and quite predictive. And yeah, some of his posts on X today, yesterday and today, have been talking about how this is coming to Europe. And so I would definitely follow him if you're looking for someone to follow on energy who's not a macro geopolitical commodity tourist.
And does he agree with you that I mean, you think the serious countries in Europe and North America, do you think they're going to start taking energy more seriously, or do you think they're going to double down on the green environmental stuff because now oil is apparently unviable, and now we all got to work together and consume less and build more solar panels? Like, which way do you see it going? Because I kind of find that they're just going to double down on all of the environmentalism.
Yeah, no, I don't know his views on that. I'm sure he's probably said somewhere. So I'd be curious to see what he said on that. Those are my personal optimistic views. Um, I would say rational views. I can't imagine a rational person in a country full of humans that need energy. To have disruption like this, like real disruption, with like quality of life. I can't imagine for that to not knock sense into the general public enough to kind of start. You see in all those videos of people like protesting and sitting in the middle of highways, and then cars come up and they're like, "Get out of the way." I imagine you'll have, you know, and to not like an analogy, you'll have a version of just like these people who are trying to go to work and have a normal life. They'll just start plowing through these other people, metaphorically speaking, right? Just like we enough. Anyway, so I don't know if I know Alex's view. He's more pessimistic. Graham, where do you fall on the scale of me and my optimism, and Alex and his doubling down pessimism?
With regards to what?
This inculcating change, right? Like it's precipitating change in terms of the EU getting its act together, Canada starting to become a commodity superpower that it should be. I see this as the beginning of 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 that change. And it's funny that you mentioned Australia. One of the biggest things that you're seeing, at least on X, so it's hard to know how reflective of reality is on the ground, but you're just seeing just this outpouring of frustration and anger that Australia is also a commodity superpower, but they're like one of the first Asian APAC countries to have shortages. They're having shortages ahead of other Asian countries that have zero oil and commodities. And all these Australians are like, how is this possible? We have oil. This is insane. So
Yeah. So maybe, yeah, I would lean towards that. This is the much needed slap in the face to align countries to, like, yeah, get their supply chains in order. That's they got a slap during the Corona era, but it wasn't really enough to wake them out, to, like, yeah, set them out of their stupor. But I think this will do the trick. But I would love to know if either of you have any, what your latest theories as to, yeah, what's going to happen over the next few weeks here, because it does seem that we are reaching some kind of wind, like a ratcheting down of hostilities. Um,
I think so for me, yeah, I would agree with you. Right now, it seems like we're kind of things have slowed down a little bit. The issue with all of this though is we're like basically one attack, like one significant attack away from things kind of kicking back up. You know, so and the problem, like I've said before, is the U.S. and Israel they have different objectives with this, right? And so um, so America is, I think the one party is like, no, let's come on, let's stop. Let's bring oil back down to normal prices. I think that's kind of what like the main motivation for the Trump administration, at least ostensibly, is. Whereas Israel really does want to, I feel like, disrupt or weaken Iran as much as possible. Um, and then Iran, the leverage that they have over this is the Strait of Hormuz, right? That's their one point of leverage, and so they really need to kind of get as much as they can out of it before, like, so for example, let's just game theory this out. Let's say Iran comes to the table and they do some kind of ceasefire. Is that really good for Iran though? Right? Like, what would history show you? Let's go back 1 year when there was a little confrontation between Iran and Israel. Well, since then, it allowed America and Israel to kind of recoup, grow back up their what's it called, their assets in the area, and then here we are again, like a year later, doing it again. So then, why wouldn't they think that even like a 30-day ceasefire would that really benefit them if it's broken again, right? I feel like if there's a ceasefire, it would only allow America at least to kind of nominally secure the Strait of Hormuz, and then what leverage do they have? So I don't know. Um, I feel like it could go on a bit more. That would be my base case. How long, I don't know, until you can kind of count on Japan, for example, to step in. They're the second largest navy, I believe, in the world. You have America number one, and Japan is the second, like by like a blue water definition, right? Japan can project anywhere in the world. Um, they have their minesweepers, apparently. Their minesweeping fleet is even better than America's because of where they're situated in the world. Their strategy with respect to Taiwan and China have kind of made it so that their naval operations are almost from a strategic standpoint, kind of can um, be applied to this other region, right? And so I think Iran doesn't want to push Japan to like really be forced to enter, because that would help America, that would help Israel. You have Japan's navy in that area too, so um, I'm not sure. I'll tell you this one thing. Sorry to go on a little more, but Brent Johnson, he talked about this. I listened to a podcast, and he said he could imagine this going on for another week or two, which would be really bad, even just another week or two. But then reaching some kind of détente, and then that would only last for some amount of time, maybe a month or two, 3 months, but then kick off again, maybe late in the summer, fall. But he doesn't believe that even if it reaches some mid short-term resolution, that it's done this year.
Yeah, there doesn't seem like like a clean way to end the conflict. So, like you're not gonna end up with like regime change and suddenly um, Iran and the U.S. are like partners, and seems very unlikely. Okay, it
No,
doesn't seem
no,
like
no.
the U.S. is going to be able to take over Iran, annex it, or anything like that. So Iran is just going to continue to have its leverage over the region. One thing that's interesting is that's been pointed out is that like Panama extracts tolls from vessels moving through the Panama Canal. Egypt extracts tolls from vessels moving through the Suez Canal, but Iran does not extract tolls through the Strait of Hormuz until now. Uh, a few vessels have reportedly gone through, and they have paid tolls, I believe, somewhere between $1 and $2 million, or something like $2 million per vessel. And some people are saying, well, that's how this is going to end. It's just that Iran is going to be like the Strait of Hormuz is going to be like a third choke point with tolls.
But even if that happens, I've heard the same thing, and all of this is still like rumors in terms of how much or how many ships. Um, it's all fairly unsubstantiated. Um, but still, let's say in the best case that this becomes a toll booth for Iran. There's still so much so many tankers backed up, and if they're the toll booth, it's gonna slow down the rate that we're used to, I believe, right? So even in the best case, it's gonna you're gonna see, you'll still see impairment, right? Like pretty massive impairment, right? Like just from a operational standpoint, like that's going to slow down the flow of ships, right? Because the country will have to make a deal or whatever, and then Iran will have to be like, okay, you're this one ship, you're ready to go, and then they'll have to tell their, I guess, military assets, don't attack that ship, but still look out for other ships. Do you know what I'm talking about? So
Yeah.
in the best case, the flow will still be impaired. It won't return to 100% of what it was
Yeah.
before, right?
Well, all right. I mean, what do we know? We're just a couple of guys out here speculating, monitoring the situation. But the market knows, right? The market is the best source of truth, and so let's see what the market is telling us. I mean, one data point that's interesting is that I believe, as David mentioned last week, uh, oil markets are kind of pricing a resolution. It seems right. Oman crude dropped by $30 in one day. Uh, the other oil markets are trading around what $93 right now for WTI, I believe, which is a drop of about 10% from a week ago. And we can get into other markets, what kind of truth they're speaking. Like, uh, Yeah, I mean, equity markets have bounced a bit, risk assets sort of bouncing back a little bit. Uh, Gold has stopped its yeah, I mean, gold dropped 20%, but it's sort of also bounced back a little bit. So I believe that the market is telling us something right now that it's kind of it's figured out. The market is saying that it's probably things aren't gonna get much worse.
Yeah, I don't believe it. I think the markets are making a mistake. The common refrain that has worked for like what 2 decades, buy the dip, right? That has to be basically pummeled out of the market. I feel like to a certain extent, and so to me, this rebound is just is reflexive. It's like muscle memory, um, and so I I would again though, right? Like could you see a reprieve? Yes, but I could also just see it kicking off instantly. Like there was a report this morning that Israel leveled some random building in Tehran, I believe, or some city in Iran, and the rumors were like, oh, that was a meeting with IRGC leadership, stuff like that, right? Like I don't think that's probably true, right? Because there hasn't been any retaliatory strikes as far as I can tell. But anything like that, I feel like could just ramp it right back up to 100. I don't know.
All right. Let's talk a little bit about gold because it's quite interesting what's been happening with gold as it relates to Bitcoin. Let me just bring up my screen share. So I've got here the Bitcoin versus gold chart. So in 2017, at the height of the 2017 bull market, you could buy with one Bitcoin, you could get around 14 ounces of gold. That was the peak, right? Then in the peak of 2021, it was around 35. In the most recent peak, let's say late 2024, and this is the all-time high, you could buy 38 ounces of gold with one Bitcoin. Now, since then, the gold Bitcoin ratio has been steadily declining, and it seems to have bottomed about a month ago at around 12, 13 ounces of gold per Bitcoin. Again, that's around what it was way back in 2017 at the peak of that Bitcoin bull market. Since since potentially bottoming about a month ago, it's now up to around 15 ounces, 15, 16 ounces. So some people are saying that, yeah, we're seeing now a reversal. It's This trend will continue. Other people are saying the opposite. For example, this guy Blunts. I mean, I'm not sure if he's predicting that gold is a good buy here. Probably going to it's probably seen the bottom on this latest drop and will rise over the next few months and year up to again above 5,000, 6,000. Anything to add on this?
The 14-month cycles of the Bitcoin to gold ratio is interesting. I don't know if you want to bring that up.
Yeah, wasn't really able to get that one on, but
Oh, okay. Well, basically, it's been pointed out that ever since Bitcoin has existed, it goes through 14-month bear cycles against gold. And it happened in 2012, 2016, late 2021, and now we're at the end of another 14-month cycle. And so it's implying that it's time for Bitcoin to rally against gold. It's just like one of those charts that's gone viral on crypto Twitter. And I mean, personally, like whenever I see one of these nice charts with convincing patterns go viral, I feel like they just immediately break. Like Plan B's stock to flow, or like the M2 money supply overlaid with Bitcoin, or like Tech Dev's business cycle thing, the blood moon cycles. I mean, I definitely think Bitcoin's undervalued against Bitcoin, but I'd be surprised if this 14-month pattern plays out again personally. And also keep in mind, Bitcoin could go way down, but the Bitcoin to gold ratio could go up if gold goes down more. So I don't know. It could be effectively irrelevant, but it's definitely interesting.
Yeah, I mean, I I um I think Bitcoin eventually will go up bigly versus gold. Um, and so again, not to sound like I'm just repeating myself, but like yeah, if you have a longer term horizon, then I don't think now's the worst time in the world to buy Bitcoin. I was just at like a 1 day conference yesterday, um, and I spoke to a couple of people. Those interviews will be coming out this weekend. They made me feel a little bullish about Bitcoin. Um, did you see? Is it Thinking USD Flood, the hyperliquid super winner guy? He had a post yesterday, I believe, that said that some STRC dashboard was like the most important thing to be looking at, to be paying attention to in crypto right now. Um, and yeah, I mean, I asked some people at the conference about this kind of stuff, and obviously they're biased because yeah, they're Bitcoin maxis and all that kind of stuff. So you have to take it with a grain of salt. But they're like, yeah. Sailor and uh, companies like Metaplanet and some other like of these top tier DATs are deploying capital now, um, and buying Bitcoin cheaply, and they'll continue to do so. And so that I mean that fits with this a lot of like this other things. I interviewed a lady, Katie Stockton, last week, right? And I was asking her about like, well, how much are you paying attention to this conflict in the Middle East? And she was saying, well, it doesn't really come into how we view markets, so we don't really pay attention to it. And she was fairly convicted that this is kind of Bitcoin is kind of in this stage of forming a bottom. So, I mean, I am kind of bullish in that regard. Then you have people like Citrini, the Giver, others on X, who are talking about the classic, right? Like, what's the crowded trade right now? Crowded trade right now is oil going to infinity, risk off, Bitcoin down. So it makes you kind of think like, well, then how should you position yourself? Um, and so yeah, I'm not doing anything. I'm sitting on my hands still, but I am kind of paying more attention than I was last week.
Could you explain why, not to put you on the spot, but why STRC is the chart to look at? What's
So STRC, basically, I'm going to butcher this. You should listen to Dylan Leclerc. I asked him exactly that. I asked him in the interview. I was like, "Why did Flood say this? Uh, why do you agree?" And he replied. It was a pretty funny moment. He was like, "Are you being rhetorical right now? Basically, are you being sarcastic?" And I was like, "No, dude. I'm an idiot. Please tell me." So and he was like, okay. But basically, if I'm going to butcher this, but you should listen to his answer. The long and the short though is, in bull markets, these kind of like quality DATs, I would say, they use equity, and equity like instruments to acquire Bitcoin, right? So their MNAV is above one, and so they use that to bring mNAV down to one, back down to one, by issuing shares and things like that, to then go out in the market and buy Bitcoin. Um, but of course, in a bear market, um, the share price goes down. You can't really do that very well, and you probably shouldn't when the mNAV is below one. And so you need kind of counter cyclical instruments to do this. And STRC is one of these instruments. There's a lot of other nuance to it that I'll let Dylan explain in the clip. But basically, it allows uh, quality DATs, I think, to um, raise funds to then buy Bitcoin when it's cheap. And this is not usually the time when you can do that, right? And so they can acquire Bitcoin now, and other like Metaplanet can, and I think like Adam Back is launching one in a couple, like 7 to 10 days, less than 2 weeks. And they're going to start going out and buying spot Bitcoin, and this will be, if you buy it now, I haven't looked at the current price, but if you buy it right now, as of yesterday, it was below MicroStrategy's overall Bitcoin price that they've bought at, which is great, right, for long term. And so um, then you add to that since we're in a bear market, um, there's not a lot of buying of Bitcoin, and so then the DATs become like MicroStrategy and company become the marginal buyer, right? And that can make the price rise quickly because sellers are starting to get exhausted, right? It's kind of definitional in bear markets. Sellers sell, 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 and they puke out their Bitcoin for a long time. When sellers get exhausted, those Bitcoin get transferred to strong hands, which is what should be happening now, right? If it's forming a base, and then you could see the beginnings of a bull market from there. So I think that's why this is important to look at right now, is because it would be a big buyer, and it would be a big buyer at a time when everyone is scared and or selling. But the big sellers have already gotten rid of all their Bitcoin, so then you kind of would see perhaps the price go up like that.
I definitely agree with you, David, that the vibe, just like besides all the data, just the vibe, it feels bullish. It feels like it's hungry for risk. I mean, I've been saying for a couple months that I'm expecting BTC to make a new low, or at least do a double bottom at 60K, but I'm also kind of feeling unsure of myself just because how long it's taking Bitcoin to make a new low. Like if you look at the weekly chart in 2022, as soon as Bitcoin closed one weekly candle below the 200 EMA, it immediately collapsed like 35% within a few days, and then it grinded down like to a new low over the course of a few months. But this time, we've closed below the 200 EMA 3 weeks in a row, and now we've closed above it almost 3 weeks in a row. So, and that's during a war and a stock market correction. So it's kind of like an unexpected display of strength. And like I said, we're also seeing hints of risk appetite coming back. Like I'm sure you guys seen Jason Calacanis. He's like one of the most famous VCs in the US, and he's out there just shamelessly shilling BitTensor, calling for a 200x on Tau. He's done like 4 podcasts on the subnets. Shamath is shilling the subnets to Jensen Huang. Some people are calling them the Taliban. So it kind of feels like crime season might be back. And like just from a technical perspective, I think you could argue like even the altcoins are due for a retracement. Like it wasn't that long ago when Athena and Ondo and Sui were these big new legit projects, and now they've all been slaughtered. So I think you could see at least like a reversion to the mean, and you can see a lot of these things. Maybe they don't make all-time highs, but it could be like an October 2023 situation where you get some 2x's or 3x's and Bitcoin goes on a higher than expected relief rally. I don't know, maybe like 84,000, something like that. So yeah, the data and the time, it's still kind of bearish if you look at what Benjamin Cowan is saying about bear cycles. he's looking for a new low. But yeah, I feel unsure myself.
Now, just to counterbalance that, Alex, I don't know if you looked at TXMC's latest post for the past day or so. I think I put it in our DMs, but he's been banging this drum for quite a while, um, which is um, Bitcoin crashed 50% basically, with equities still hovering near all-time highs. It doesn't make any sense for Bitcoin to crash further, uh, with equities in other markets not really correcting that much. So, uh, the fact that Bitcoin hasn't gone down since then shouldn't be used to say that it can't go down more. That is to say, if equities puke suddenly like 20%, I think it would be kind of. I think you have to expect that Bitcoin's going to puke with it, right? Um, but if equities don't, then I don't think you should expect Bitcoin to go down much more. So again, right, like, what's going to happen? I don't know exactly, but you have to be careful, like how you describe Bitcoin's price action versus the performance of other assets.
Yeah, maybe my 2 cents is, on the one hand, it seems like the consensus is that Bitcoin is going to, double bottom or maybe hit a new low. And whenever there's a consensus like that, it never happens, right? We've seen that time and time again. Max pain is not what is the opposite of what the consensus is, right? It's always like that. And so there's that. And then on the other hand, I it does seem like equities are going to puke 20%. Like it just does seem like that. And um, I don't know, like everybody's just like passive flows into stocks forever, buy the dip, buy the dip, buy the dip. I buy this argument, David, that those people need to be taught a lesson, and you might not. It just might not be like that. Equities go up to the right kind of forever, right? You might see it has happened in the past, several years of down, and I don't know. My gut tells me that's going to happen. So I don't know. Maybe this time's different, and Bitcoin actually performs the opposite in that scenario.
Yeah, the S&P 500 is 16% away from its 200 EMA, which it's bounced off like a million times in the past. So that's like the Liberation Day crash as well. So yeah, I could definitely see that happening. It's due for it, in fact.
Yeah.
All right, good stuff. Let's move on to our last topic of the week, which is a little Clarity Action update. What happened this week with the Clarity Act? Basically, it seems like it's being kind of more and more settled that no yield on the stable coins. The banks got their way. It seems like that's what the final version of the Clarity Act will enshrine. And as a result of that, Circle's stock had its it was its biggest ever 1 day drop. Um, and yeah, I don't know. What do you guys think about this? And maybe a follow up question: will Clarity actually get through? I've heard more and more people seemingly more confident that it will this year.
I think it'll go through, and I think it'll go through in its current form, which is a really surprising to everyone that the banks got what they want. I mean, an official document hasn't been released yet, but as you said, most of the reports are coming out that its newest draft language, it's not going to allow the rewards on stablecoins. But it does leave room for like other types of rewards tied to platform activity. But you're not going to be able to just park your USDC and earn 4% from the treasuries. And that's been like the long-standing question of like why can the banks earn yield on my money but I can't? And the crypto exchanges have made this easy. Like with a few taps, you just get whatever the treasuries are paying and it's done. But that's of course a big problem for the banks because if everyone finds out you can do that, and there's been studies on this, a lot of papers have warned that if everyone were to seamlessly earn yield on their USD at a crypto exchange, there would almost certainly be a certain level of deposit flight from the banks, and they can't have that. Jamie Dimon needs his bonus, and the boomers who hold Bank of America stock, they need to go on vacation to Puerto Vallarta, and that's like pretty much the only reason. Like if they're gonna talk about, oh, we need guardrails and make sure it's still safe, I think that's a psyop. Like this is risk-free yield from the treasury, and that's the key issue that the crypto industry was fighting the banks over. So I'm not surprised, and I think it'll go through in this current form. But maybe I'm just being pessimistic again.
So I I used to think like what you thought, Alex, and then Austin Campbell, he he is a host on Bips and Bips. I always whatever. Sorry guys. Anyway, he wrote a couple articles, which I think I linked to in the newsletter, both of them, and he convinced me that the banks were wrong, basically. And the problem with the Clarity Act, the real problem and I'm just going to be regurgitating what he says, so this is not something from me, but I agree with it. Anyway, the problem here is that the banks getting their way really sets a precedent, and it's a bad precedent because the banks are getting their way for the wrong reasons, for exactly the wrong reasons. As in, um, they won't have any deposit flight, right? So they're saying this, and it's unclear if they actually believe it or not. But it's almost worse if they do believe it, because then that means that they don't understand basic finance, at least the crypto side of finance. But Austin Campbell, he has a couple articles where he systematically walks through how a U.S. domiciled stablecoin um, is created and where those deposits go, how they are created or destroyed, right? And basically, the TLDR is any stablecoin that's created in the U.S. is deposited in a bank. Thus, there is no deposit flight at all. There's basically zero deposit flight. In fact, you see quite the opposite because there's appetite for stablecoins. You would see increased deposits at these banks, and so uh, the arguments that they're using are either a lies or disingenuousness, or they're just like they don't understand. So choose which one you think is worse. Again, the bad thing is it sets a
David,
precedence. Yeah,
can I interrupt because that doesn't make
yeah.
sense to me. Um, isn't the whole thing that the banks have the deposits, but they don't have to pay you any, like they earn yield on the deposits and they pay you like 0.03%. But what you're talking about is the banks, so yeah, they have the deposits, but they have to pay yield on it. That's the problem, isn't it?
No, no, no. So okay. So separate the yield thing is the argument that the banks have made. The one that Alex just said is that if you do this, then there will be deposit flight away from the banks, and then they won't be able to lend, and the economy will be destroyed because the banks won't have deposits anymore. Right? That's the argument that they've made. The
So
argument
okay, so it's a
they're not
disingenuous
making
argument.
yeah, they're
It's a
not making the
because
argument.
that's
They're
not
not making the
yeah.
argument that oh, we're going to have less money. That's not the argument they're making,
Yeah, so
right?
exactly. So it's a
That's
disingenuous argument because, right? That's what it's got to be, right? Like it's just the real thing is that they want to be able to earn that spread between the deposits that people put into the bank and what the bank pays the people on interest. So like, yeah, people get next to nothing, and the bank just like makes money with their deposits that the people put in the bank.
Well,
But that's what they actually don't want to give up.
well, no. So Alex, so Austin Campbell goes into this because even there they're wrong. Because let's look at it. So let's say, so if I mean, you have to. I guess you have to take it. You have to take it on faith. I guess that there is stablecoin demand, and that there will be lots of people wanting stablecoins, and thus there'll be more deposits. This thing will create more deposits. So then the bank has deposits. Now they get to choose what they do with those deposits. They can put those deposits into treasuries, so they can still probably earn more money. So it's not like they're going to lose money on this. I guess they just want to have even more money. I don't know. I don't know exactly what the thing is. But again, yeah. So that's why this is like a bad precedent. So
And do you know how much of the stablecoin market that would apply to? Like when you say USD or US domiciled stablecoins, what does that mean? Doesn't that just refer right now to USDC? Like what about, couldn't you still earn yield on a bunch of different stablecoins in a crypto exchange? And the banks wouldn't see those deposits because they're not holding reserves for, USD1 and DAI and stuff like that. Or is that
so
what the
you're
Clarity Act wants to force?
well. I have to get back into the details. I don't know how the Clarity Act, um, in conjunction with the Genius Act, distinguish between like onshore and offshore stablecoins. Um, I'm not exactly sure how they do that, right? Um, and I don't know how exactly they can regulate offshore stablecoins, right? Offshore dollar denominated stablecoins. Maybe they can't. So I guess that's an opportunity. Um, yeah, I'm not sure on that. But this would be for, as far as I'm, and I think the bank's argument, right, is about um, stablecoins created in the United States, because that's what the banks, that's where they get the deposits anyway, right? Is from money in the U.S., money entering the U.S.
All right. Well, let's keep watching what happens with the Clarity Act. I'm sure the banks will get their way, but eventually they will be destroyed.
Why do you say that, Graham? Why do you say
Well, because the good guys always win.
that? I mean, yeah,
There's one thing Hollywood's taught me.
banks have they're a flash in the pan for sure. They they've been able to, they haven't been able to weather technological innovation over the years, so they're they'll be done. They'll be done soon. Let me ask you a question. So I would say, just on the Clarity Act in general, aside, let's put the yield thing aside. A lot of the people that I listen to, including on Bits and Bits, like Austin Campbell's co-hosts, they're just happy to have something, right? And they think it'll be a catalyst, right? Because it's better to have clarity on these various things, yield or no yield. So I guess, so that's good, I suppose. Um, but do you uh, do you think that, let's talk strictly about U.S. registered businesses? Do you think, like, for example, Coinbase or PayPal, do you think that they're gonna not be able to give yield on their stablecoins? You think this is gonna work?
Um, yeah, I could see it working.
I just feel like there's like an infinite way around this kind of stuff. right? Like
Yeah,
there'd
well,
be
I kind of hope it works actually, because then people will just be like, well, okay, I'll just withdraw from Coinbase and put it in self custody and earn yield by like some vault that basically does the exact same thing.
okay.
That
Well,
is the
so
bullish, like contrarian argument is that people will just figure out how to use a wallet finally and they'll withdraw and they'll earn higher yields on DeFi. It's like bullish for
yeah.
DeFi.
So this is going to be the other big topic of my newsletter tomorrow, which is um, crypto CT, maybe crypto Twitter alone. I don't know, but I think the crypto industry is feeling really bad because of all that hack that was earlier this week, right? The the what's it called? Resolve minting stablecoin hack
USR.
that USR, yeah, that then kind of like went to. Alex, can you explain this a little bit, and then I want to say something about it.
You mean with what happened with
Yeah,
the USR?
yeah, yeah. What happened, and then like what happened as it kind of like reverberated through the DeFi ecosystem.
So yeah, Resolve has a stable coin, or they had a stable coin called USR. It's now at 26 cents, I think. So it's not as stable as it was sold. And what happened was unauthorized USR was basically like minted into circulation, and the market began like treating that as part of the supply, even though it was totally unbacked, and the peg just completely unraveled. And I guess like the point you the the point that you wanted to bring up was like how it reverberated through DeFi. Like you mean how it's getting everyone to think about whether or not we should have all of DeFi be
Well,
reliant on these stable coins. Is that what you
well
want to get
then,
into?
well yeah, just like so. Then there were Graham mentioned vaults. There were vaults and other pools that had USR in it, and those those were drained. Like what was the big one? It was called like was it Focus, something like that. I can't remember exactly. But basically, um, you had a lot of people in DeFi this week. I at least on my timeline talking about like, oh my God, this is ridiculous. Another DeFi hack, another vault, uh, poorly managed. Um, they were the vault was yielding like 5% or something like that, 6%, something like that, and then people just lost all their funds. Like why? And then everyone's saying like, well, with all these hacks, there's a list of hacks somewhere. I have the link somewhere. Why would you ever put money, like big money, real money, into DeFi because the risk is too high? And so you saw a lot of like kind of depression, bearishness on crypto and DeFi for this kind of thing. And then as Alex, you maybe you could talk about just like can stablecoins really be trusted in this way in just the wild west open decentralized chains, and then
Well,
doesn't
yeah,
it just look like
it's boosting the arguments that if RWAs and tokenization of everything and pricing all that in stablecoins, if that's really going to happen, then the institutions and the banks that participate are probably not going to want to participate on decentralized chains. They're going to want their own closed off, centralized, like enterprise blockchains that they have the ability to roll back. Which also like opens another argument of like why even have a chain if you're just gonna roll it back every time something happens. But yeah, I guess there's like two arguments that the institutions are gonna buy ETH and Sol and do everything there, and then the other argument is they're going to create their own, or they're going to make sure that they're going to make sure that they have some type of control instead of just operating out in the Wild West with all of the CT degens.
yeah. And so there was also depression again when you look at some of these vaults and everything like that. The yield is not that great right now, right? And so you saw these charts circulating around about how the yield is below treasuries. Um, and then you had other people saying, well, yes, it's cyclical in crypto. In bear markets, it often goes below the risk-free rate of treasuries, and then in bull markets, it goes well above it. Um, the point being, though, Graham, is um, man, if I had a lot of money, me personally, I don't think I would be very comfortable with putting most of it on chain. I don't. I mean, you know what I'm saying. I don't know how much of it would you let's say you had like $10 million, Graham. Um, how much of that would you be comfortable with putting on chain, in light of a tax and stuff like that? I can't hear you. You're muted.
You definitely wouldn't put it all in one vault.
How much of it would you put total on chain? Maybe diversified across 1,000 million vaults.
Um, just put it all, I guess, but just not all in the same vault.
That's why we need agents to organize all these things and to not lose seed phrases and click on the wrong thing.
Yeah.
Yeah, I guess so. Yeah.
All right.
Um,
Well, on that note, I'm going to get back to my agent. I've been struggling with him.
what's
Slap
the
him around a
name?
bit.
What's your agent's name, or is that dox it too much? Do you have it? Have
I
it?
don't have,
Is it
don't
named, or
have
you
the
just
name.
call it like you call it like machine slave or something? Machine slave 01.
Yeah. No. Yeah. Let's wrap it up there, gentlemen. Thank you, as usual, for your insights. Have a great week. Thanks for listening. See you next time on Token Narratives.
See you later.